Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, Bitcoin is still playing out the bearish divergence, but is now starting to run into this major area of support that we need to pay attention to, while Ethereum is now doing the same, running into this significant area of support, which is one of the reasons as to why I've just taken some more profits out of my Ethereum shorts position, but still overall short on Ethereum, which I'll talk about in just a moment, alongside Cardano, now starting to play out this significant bearish divergence. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, starting off on the weekly Bitcoin price chart, and the super trend indicator is still sitting in the green, indicating a larger bull market. But on this weekly Bitcoin price chart, we still have that major bearish divergence telling us that at least over the next few weeks or months, most likely the next couple of months, we're likely going to see a larger slowdown or potentially a larger pullback in the price of Bitcoin later this month, and especially leading into September. And I got a lot of comments in recent videos here on the channel asking me, well, does that mean the bull market is over? Because obviously based on the 4-year halving cycles, we're meant to see the bull market top sometime near the end of this year based on those 4-year cycles. But in my personal opinion, I think the 4-year cycles are starting to come to an end. They're going to have less of an impact on the price of Bitcoin. The halvings are going to have less and less impact on the price of Bitcoin, especially now with institutional money and Wall Street money coming into Bitcoin through the ETFs and through companies like Strategy, for example. But if you still have the opinion that the 4-year cycles are still intact and still going to play out, yes, this means that the bull market is effectively over, or at least right near the end stages of the bull market based on those 4-year cycles. But once again, in my opinion, I think the 4-year cycles are going to start losing relevance. And so rather than talking about the next multiple years, trying to guess when the next bear market bottom would be, or the next bull market top in the next halving cycle in 2029, for example, rather than looking that far out, I'm just focusing on the next few weeks and months, because at least in my opinion, that is where we could be more accurate at guessing where the price of Bitcoin is going to go. And so like I've already been saying over the last few weeks, it is quite likely we're going to see a larger slowdown. So at best, just a sideways consolidation, or most likely a bit more of a pullback at some point in the next couple of months or so. And if we're taking a look at this 3-day Bitcoin price chart, we're still gaining a little bit more bearish momentum in the 3-day Bitcoin MACD, but still not a significant amount of bearish momentum. So we don't really have the same sort of bearish momentum that we saw in previous crashes or large downturns in the price of Bitcoin on the larger timeframes. But of course, we are still currently looking more bearish than we are bullish, at least in the somewhat shorter term here. And if we're taking a look at the daily Bitcoin price chart, technically speaking, we still have an active bearish divergence playing out on the daily time frame, as well as that bearish divergence on the weekly time frame. But what we are seeing right now in the price of Bitcoin is that Bitcoin is starting to find a bit of support very close to that $112,000 level. Of course, I've been talking about roughly $112,000 as a key level of support to watch out for. That's pretty much exactly where we bounced last time at this low around the start of August. And of course, we rejected from pretty much exactly 112,000 back here near the end of May. And so obviously roughly 112,000 is a key level that many people are focusing on, which is potentially why we've started to find a bit of support slightly before that level, with some traders front running that level, starting to buy a little bit, or maybe taking some profits from short positions slightly before 112,000. But really in between 112 to 110,000, in that area right there, I still expect a lot of support for the price of Bitcoin. So yes, that means it could be likely we could see some sort of short-term bounce from around this area on the price chart. So obviously the bearish divergence still playing out, which means we should not expect significant bullish momentum, but just be aware that even during these larger pullbacks here, of course, we can see little bounces and things like that in the shorter term from support levels. And if we're zooming further into the short term, taking a look at the 4-hour Bitcoin price chart, we can see that just recently on this latest drop right here, the 4-hour Bitcoin RSI hit oversold, just slightly an oversold as we can see, which essentially coincides with the fact that we're getting close to 112,000 acting as support. Potentially 2 reasons causing this slight little bounce here in the immediate short term. But clearly, once again, we can bounce from points of support like 117,000, that was support right here, and also at around 115,000, that was short-term support right here. But we're simply just seeing short-term bounces from those levels of support, but we're not seeing bullish momentum actually carrying the price much higher. As we can see, the momentum is still more bearish than it is bullish. And if we do end up seeing a little bit more of a bounce here in the short term, I'll now expect some resistance at roughly 115,000 based on previous resistance and also previous support in the price of Bitcoin, now becoming new resistance again at once again roughly 115,000. And above that level, I'd expect some major resistance at 117,000, which is exactly to the nearest cent where the price of Bitcoin rejected from just the other day. And based on the 4-hour time frame, this shorter term bearish divergence has now effectively already played its part. We've already seen the pullback following the bearish divergence, which I warned about since all the way back up here when the bearish divergence actually confirmed here in the short term. But now that we've hit oversold on the 4-hour RSI, once again, this means that this has effectively already played its part. It's already played out. But remember, we still have a bearish divergence playing out on the daily time frame and on the weekly time frame, which will likely continue to play out at least for a number of weeks, possibly a number of months. And so overall, once again, the situation is still looking a little bit more bearish than it is bullish if we're talking about the shorter term trend or the momentum in the market right now. But just be aware that obviously the price does not move in a straight line. We can see little bounces here and there from certain points of support, like close to 112,000. And if we're taking a look at the Bitcoin liquidation heat map, we can see that over the last few days, with this recent pullback, once again, over the last few days, the price of Bitcoin has now wiped out these areas of liquidity, liquidating a bunch of over leveraged long positions that longed at these slight little bounces here, obviously failing to guess the short term trend. But now that the price of Bitcoin has already wiped out those long positions, that essentially means we've already exhausted that liquidity. We've already used up the fuel that we had towards the downside here, because in case you're new to all of this, essentially when we see long positions getting liquidated, that can accelerate some bearish price action, and usually the price moves towards where we have a lot of liquidity. But right now, because we've already wiped out those areas of liquidity, we don't really have significant areas to watch out for right now, but we do have a small amount building at just above 112,000, around 112.3k, and also a small amount at around 119,500. But considering the proximity of those levels to the current price, we can see obviously it's much more likely that the price would hit 112,000 first before potentially hitting 119, 120k maybe at some point later on. But remember, we have to obviously remember the trend and the momentum in the market right now, which is currently more bearish than it is bullish. So we're still pointing towards these slightly lower targets, potentially coming in for a test of that roughly 112k level, acting as major support in between 110k to 112k. And so due to all of this information, I'm still currently in my Ethereum short position, which I'll talk more about in just a moment. But first, if you want to take trades just like this to make a lot of profits in crypto, you have to be set up ready to go on a crypto exchange. And personally, I'm taking this trade right here over on BTNX. So I'll make sure to leave a link to BTNX below this video in the description and in the pinned comment. And if you use that link, it'll take you to this page right here where you can claim some massive bonuses and get a share of potentially up to 25,000 USD in a prize pool here, just simply by trading crypto using that link. So if you have large trading volumes here, or if you're trading well with high percentage returns, or if you're a new user, etc., there's multiple ways you can get a percent of this major 25,000 USDT prize pool, which is exclusive for only those of you that use the link below this video to actually make your BTNX account. No one else on BTNX can access this prize pool. Only those of you that can use that link, once again, can gain access to this huge prize pool here. So if you're going to be trading crypto anyway, or preparing to take the next trading opportunity, you might as well get set up ready to go using that link to take advantage of potentially claiming some major prizes here. And in case you're wondering, BTNX is a no KYC exchange, which means you can access it from basically any country of the world without needing any KYC. But as always, check your local regulations when it comes to trading crypto. And for whatever reason, if you don't want BTNX as an exchange, there's also Pinex as another exchange out there that I also use. So I'll also make sure to leave a link to Pinex below this video. And if you use that link, it'll take you to this page where you can also claim some massive bonuses. For example, if you simply just make a Pinex account using that link, takes about 1 minute to do this, and then complete KYC, you get a free $50 bonus onto your Pinex account just by using that link below this video to make your account and completing KYC. And then also, if you make deposits, you can get huge deposit bonuses here. So for example, if you deposit just $100, you get a $100 bonus into your Pinex account. Or if you deposit up to $10,000, you get a $1,000 bonus into your Pinex account, free money from the exchange, which you can use to trade over on Pinex. So once again, if you're going to be trading crypto anyway, definitely check out these exchanges, the first and second link below this video, to take advantage of these huge bonuses here. But with that being said, taking a look at the Bitcoin dominance chart on the 3-day time frame, and overall the larger trend or the price structure for the Bitcoin dominance, the momentum right now is still pointing in the bearish direction, which in terms of the bigger picture here, not the short-term moves, but the bigger picture is still looking okay for a lot of the altcoin market, at least versus Bitcoin compared to Bitcoin. Because in case you're new to all of this, when the Bitcoin dominance dumps like this, that means altcoins are either outperforming Bitcoin or at least holding up better than what Bitcoin is doing. But if the Bitcoin dominance is bouncing, like what we just saw the other day, just in the short term, that means altcoins are underperforming Bitcoin on average. So basically a lot of altcoins are doing worse than whatever Bitcoin is doing if the Bitcoin dominance is bullish or bouncing. And so we can see that over the last 1 to 2 months, basically ever since around the start of July, a lot of the altcoin market, especially major altcoins like Ethereum, have performed better than what a Bitcoin has done since around early July all the way up until now. But just in the immediate short term, once again, over the last couple of days or so, a lot of those major altcoins have been underperforming Bitcoin due to this slight little short-term bounce here in the Bitcoin dominance. And considering that the 3-day Bitcoin dominance RSI briefly hit oversold just the other day, the last time we hit oversold in the 3-day RSI for the Bitcoin dominance, we did see a decent bounce over the next 1 to 2 weeks. Considering that, also considering a possible bullish divergence forming right now, it is possible we could see another slight little bounce towards the upside in the Bitcoin dominance, maybe to retest this area based on previous significant support, which will likely act as new resistance, sitting in between around 60.5% to 61% in the Bitcoin dominance. And so once again, if we continue to see a little bit more of a bounce here, maybe to retest that area while we're seeing the retest, while we're seeing that short-term bounce, just in the immediate short term, that would not be too good for a lot of the major altcoins, not every altcoin, but most of the major altcoins. And if we're taking a look at Ethereum on the 3-day time frame, we can see that after that pretty much perfect rejection from 4.8k, close to the previous all-time high, still acting as major resistance at 4.8k to 4.9k, after we saw that rejection, we've now retested this previous significant area of resistance, now acting as new support, sitting in between around 3.9k to 4.1k. And obviously this has been a major price target of mine over the last few days or so with my Ethereum short position, which I'll talk about in just a moment. I've been targeting this area for Ethereum over the last few days as a very significant area on the price chart. And I said in my last video, for the bulls out there, you better hope that Ethereum holds this area, because for as long as we're holding this area, the larger or longer term price structure is still looking okay for Ethereum. We're still looking bullish in terms of the bigger picture or the longer term trend. And so for all we know, this may end up just being another short-term pullback during a much larger bullish trend before we see another breakout later on. But if we fail to hold this area, this is a key area on the price chart, a turning point, because if we confirm candle closes, especially a weekly candle close below around 3.9k, that would be extremely bearish for Ethereum, losing this area right here, which would be a change in the price structure for the bearish direction. In that scenario, we'll likely see a much further crash in the price of Ethereum. And so once again, definitely keep a close eye on this area on the price chart in between 3.9k to 4.1k, which is currently acting as a major support, which at least for now is some good news to pay attention to. And if we're taking a look at the daily Ethereum price chart, despite the fact that we are finding some short-term support at that major area right here, obviously playing out a slight little bounce in the short term, clearly the momentum is still looking a bit more bearish than it is bullish. We're clearly lacking bullish momentum as a result of this bearish divergence already actively playing out, as I've been warning about for almost a week now on the channel. And so clearly, once again, this bearish divergence means we're most likely going to see either a further pullback or at best maybe a bit of some sideways price action here. But essentially, we should not be expecting significant bullish momentum just after this bearish divergence, which obviously has been playing out very nicely here. And the last bearish divergence of a similar size to this one that we saw on the daily Ethereum price chart was this one right here, which played out for close to 2 weeks, just under 2 weeks. And that was over a 20% pullback, around a 25% pullback from high to low. But from where we are right now, or from the highs to where we are right now, or to the low point, basically, that's only about a 14%, or to where we are right now, it's about a 12% from high to low, as we can see. So nowhere near 20% pullback, at least so far. But obviously, we do have to remember the fact that we are running into this very significant area of support on the 3-day and also on the weekly Ethereum price chart. So keep that in mind. This will likely support the price, hold the price up, at least for now. And if we're taking a look at ETH, BTC, Ethereum versus Bitcoin on the daily time frame, at least for now, we're still actively playing out this bearish divergence despite the current short-term bounce in ETH BTC. And so once again, this means that while this is still playing out, Ethereum is slightly underperforming what Bitcoin is doing in terms of the trend or the current movement that's playing out. Obviously not the day-to-day price action. The current daily candle is green, meaning Ethereum is performing slightly better than Bitcoin just today. But over the last 1 week or so, Ethereum has been underperforming Bitcoin, as we can see basically since this bearish divergence confirmed right here. And so if you've been watching the channel over the last 1 week or so, you'll know that this is one of the main reasons as to why I decided to short Ethereum over the last few days rather than just shorting Bitcoin or some other crypto asset, because Ethereum, if for example Ethereum is underperforming Bitcoin while Bitcoin is showing a lot of weakness and playing out bearish price action, of course that means Ethereum is likely going to play out a decent amount of bearish price action, as we've seen over the last 1 week or so, as I've already been talking about since these highs right here. And so considering all of this information, putting this together into a trading strategy, personally, once again, I am still short on Ethereum, but considering the fact that we're running into very significant support, meaning the price could likely bounce from this area and potentially not go lower than this area. That is a potential scenario we need to consider. Considering that information, of course, I have taken a decent amount of profits out of this short position, but still overall remaining short, at least to some degree, just in case we possibly break this area. And so obviously a couple of days ago now on the channel, right around here, I shared that I'm shorting Ethereum, and it was a bit over a 200k Ethereum short position of now effectively half the size of the trade. Is now about a $100,000 Ethereum short position, currently realized over 5,300 USD in realized profits here, and still roughly 6,000 USD in unrealized profits. And so even in the absolute worst case scenario, considering where my stop loss is sitting at right now, we could see that in the worst case scenario, that would secure another 1,400 USD in profits on top of the already realized profits here. So effectively almost 7,000, well over $6,000 in profits in the worst case scenario for this short position if the price just completely pumps from where we are right now. But remember, I still have some of the trade open, not closing the entire trade, just in case we possibly break this area, because like I said earlier, if we break below 3.9k with confirmation, that'll be extremely bearish for Ethereum. And so obviously in that case, this small short position here could potentially make some major profits if we break this area right here. So that's why I've not closed the entire trade, but I have closed a decent amount of the trade, closing basically once again securing a lot of profits here due to the fact that we're running into this major support. And so that is my exact trading strategy right now for Ethereum, showing you exactly how I'm planning to make a lot of profits in this market, no matter what the price is doing. It does not matter if the price is pumping or dumping. As crypto traders, we can make money in both directions, like what I did about a week ago with this Bitcoin long position I shared on the channel back then. Check my channel. I made over $30,000 with this long position right here, and just now with this quick short position in about 3 days, making well over 11,000 USD in some quick profits during a dump. And remember, if you want to take trades just like this for yourself to make a lot of money in crypto, you have to be signed up, ready to go on a crypto exchange. And once again, I'm taking this trade right here over on Bitfinex. That first link below this video, you can claim some major bonuses that are only available using that link to this exchange right here that I am currently trading on. But with that being said, taking a look at Cardano, because Cardano has been one of the top suggested altcoins in the comment section below these videos. So looking at the daily Cardano price chart, and right now we are technically playing out an already confirmed a major bearish divergence for the price of Cardano. Obviously, we've formed an already confirmed major higher highs in the price in the candle closes and confirmed lower highs in the Cardano RSI on the daily time frame. And so once again, just like any bearish divergence, this means we're most likely going to be lacking bullish momentum at best. So at best, just some sideways price action, but honestly, most likely a bit more of a pullback coming very soon over the following days or possibly weeks is what this means right now for the price of Cardano. And so that is simply the situation for Cardano. But of course, we also have to consider other levels of support and resistance where the price could possibly bounce from or reject from. In the case of a bounce, obviously rejecting back off resistance. And so looking at some of those levels, looking at this 8-hour Cardano price chart, looking at the Fibonacci retracement tool here, we could see this major area of support based on previous resistance and also based on the 38.2% Fibonacci level sitting at in between around 82 to 84 cents approximately. And so at least for now, that is the area of support to focus on. Once again, 82 to 84 cents acting as key support. But if we break below this area, especially if we see candle closes confirm below around 82 cents. In that situation, we'll likely see a drop down towards around 76 to 77 cents as the next key level of support. And below that level, it would have major support in between around 68 cents to 71 cents. And as for resistance, if we break any of these levels of support, essentially expect previous support to become new resistance, like this level right here. This was support right here. And so I'd now expect resistance at this level if the price were to actually bounce here, which is sitting at around 89 to 90 cents, now acting as strong resistance. And so once again, at least for the next few days or possibly weeks, expect most likely a bit more of a pullback, or at least lacking bullish momentum as the most likely outcome for the price of Cardano. But obviously also remember that we have certain points of support where we could see some slight little bounces here, but still lacking momentum. And if we're taking a look at the price of XRP on the weekly time frame, XRP is still perfectly playing out the major bearish divergence, which I warned about weeks ago now on the channel when everyone was telling me I'm going to be wrong about this. When the price was back above $3, well above $3, I was warning about this significant bearish divergence, telling everyone, warning everyone that we're about to see a larger pullback or a larger slowdown for the next couple of months for the price of XRP. And this is now perfectly starting to play out as I've been warning about for weeks. But in case you're new to the channel, the last significant bearish divergence we saw like this on the weekly XRP price chart was this one all the way back here at the end of 2020, entering into early 2021. We saw higher highs in the price in the candle closes and lower highs in the weekly XRP RSI. And what came next was a significant pullback over the next few months from around April 2021 all the way through towards July 2021. From the candle closes here, from high to low, over a 60% crash in the price of XRP, but from the actual candle wick high to the candle wick low, a 74% move towards the downside from high to low over multiple months worth of bearish price action. And so once again, that is simply just sharing what happened last time we confirmed the signal that has just confirmed and is already starting to play out on this same weekly XRP price chart right now. So keep that in mind. And if we're taking a look at the daily XRP price chart, we're now breaking below a very important level on the price chart, which was this Fibonacci level at around $2.90. And we've just now confirmed a daily candle close below 290. And so unless we very quickly confirm a daily candle close back above 290, obviously this is not looking too good in the short term. We could likely see a retest of this low right here sitting at around 275. But if that does not hold the price, expect a further drop towards this significant area on the price chart based on previous significant resistance, which will likely act as strong support sitting in between around 255 to 262 as the next major target. And once again, we could see short-term bullish moves, short-term bearish moves. But if we're looking at the bigger picture, the larger price structure, this is still looking very bearish, as I've been warning about every day for weeks now on the channel, basically every day since we broke below $3.40. From that point onwards, I've been saying every day that the larger price structure is looking very similar to what we saw near the beginning of this year, around January, entering into February and entering into March. And so yes, we can see decent bounces in the short term, but don't be fooled by those short-term bounces. The larger price structure, the bigger picture, still currently looking bearish, at least for the next few weeks or most likely the next few months. And if we're taking a look at the price of Chainlink on the daily time frame, we can see that right now Chainlink is starting to lose a bit of bullish momentum, but technically we've not yet actually confirmed a breakdown in the bullish price structure, unlike XRP right now on the daily time frame. And so technically we're still seeing higher lows and higher highs, but clearly after such a major bullish move, it is very risky to enter in at these prices, especially if you're entering in with leverage with a long position, for example. Very risky, not recommended. As always, do what you want to do, but not recommended. And so when it comes to support and resistance to watch out for, I would expect a lot of resistance just under $27, around $26.70 to $27. And obviously we pretty much perfectly rejected from around $26.70, right around this previous high, which is where I've been saying expect a lot of resistance at just under $27. So we pretty much perfectly rejected from that level, and we've now actually started to break back below around $24 to $25, and we're now actually retesting that area as of recording this video. And so honestly, based on the current price action in the shorter term, I'll not be surprised if the price just kind of consolidates a little bit and then maybe starts to play out a slight little pullback if the rest of the crypto market like XRP, Cardano, Ethereum, etc. are playing out pullbacks. It's likely Chainlink will eventually follow the rest of the crypto market. But considering the recent price action for Chainlink, of course, Chainlink is holding up a lot better than a lot of the crypto market, which means if we maybe play out a pullback, it might not necessarily be as bad as what some of the other cryptos are doing. Like, for example, XRP right now starting to look not so good, but Chainlink, for example, considering the recent price action, a lot of traders, a lot of buyers might be looking at some slightly lower prices to quickly buy up the price based on FOMO from previous price action. But if we were to see a bit more of a pullback here, once again, if we break below around $24 decisively and fail to get back above that area, in that situation, the next major area of support is in between around $20 to $21. And if we're taking a look at this daily Chainlink price chart, technically speaking, we now have one confirmation signal to now confirm this new bearish divergence with a new higher high confirmed in the price in the candle closes and a new lower high just now confirmed with one confirmation in the daily Chainlink RSI. And so obviously, if we're only looking at the price by itself and ignoring indicators like the RSI, technically you could argue that we're still forming bullish price structure. We're still looking okay, but considering the low highs that are forming in the RSI, this is a sign that we are losing bullish momentum and starting to grow some weakness here in the price of Chainlink. Basically, the trend right here, the bullish trend is growing weaker, which basically means expect most likely a bit of a sideways consolidation, or especially if the rest of the crypto market is pulling back, it's likely that at some point in the next couple of weeks or so, we could start to see a bit more of a pullback for Chainlink as a likely outcome. So keep that in mind. But overall, once again, my trading strategy, at least for now, is just to remain short on Ethereum, keep the current position size, considering I've just reduced the size of the trade based on the recent support area right here. But once again, if we break below that support, essentially this short position will continue to print some major profits as the price dumps. And remember, if you want to take trades just like this for yourself, check out the links below this video to those exchanges if you want to claim those massive bonuses that are only available using those links. And if you want to actually know how you can take trades just like this for yourself to make a lot of easy money in crypto, make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.